volume. I'm not sure if y'all could hear me, but it's currently September 30th, 2023. It's early morning on a Sunday. I think it's a Sunday. No, it's a Saturday. Markets are closed. And I just wanted to excuse me if you could hear the highway in the background, but basically just wanted to cover the markets as of what has been transpiring over the. I guess we'll just hop right into it. Um, and I think we should start with first just covering what's happening on the economic calendar coming this week, coming forward. We have on Monday quite a bit of news. We got Jerome Powell speaking uh, right here. We got Fed Powell. We got some numbers released as far as the PMI. We got another Fed member speaking at the 10 o'clock hour. So that'll be back to back. Um, Going into Tuesday, we have the jolts that could move markets. Of course, more importantly, all eyes will be on ADP, PMI for inflation numbers. That's also important. Going into Thursday, we'll be looking for our unemployment claims, um, hourly average hourly earnings, and of course non-farm payroll numbers and the unemployment rates. So next week will be a loaded week when it comes to important news. Start kicking it off with Jerome Powell. So that being said, now that we have the context, uh, let's go ahead and look and see what price action is likely to transpire. To do that, we'll start with what has happened. So, as far as the VIX, I guess we could start at being that this will be the kickoff Monday to a brand new month. We could see that over the last 5 months, or this month will have been the highest close since the previous 5 months, where we left around the 16 area. This area right here headed lower, and from down here, uh, we base sideways basically for 4 months, right? Not going too much further below the 813. Um, so we had an aggressive exodus from that area upwards, closing above 17, which has been, if you zoom out, you'll see it's been a level. It's kind of difficult to chart the VIX. However, you could see not nodes of where closes or wicks migrate to. So we've left the lower area, and you it seems as if going forward we should expect VIX to be elevated in this region. And so that being said, and we could go down and look at it on a weekly basis, and basically, you're looking for this area right here where you would expect VIX to trade. Going into these MAs, it might be above, below, but basically a semi-elevated VIX somewhere in this area, right? That's what you would expect going forward. Um, so that being the case, a VIX slightly elevated from pretty much, going into the beginning of the year, going down. The VIX was going down into present. So the size of the moves were decreasing. The average range. That's all the VIX is pretty much telling you is what range of moves should you expect. So we should expect the average daily range, the ATR, to be increasing going forward, whether it's up or down. You'll see bigger swings in the market. And, you could say what you want, whether, but that makes for good day trading, and that's what we're all about here. Just taking a brief look at the daily as well. So, we had a, we broke the highs, this level. We broke above it. We got our pullback. So now let's see if, this is where you would expect a lower high if you were to view this as a trend. If we were below 17, we would be coming down here. But with us being up here, like it speaks to the point that we'll be seeing higher prices, or higher levels in the VIX rather, going forward. So what does that mean for us? Getting right into the charts. Taking alongside the VIX, you want to also know where the US dollar, where the Dixie is going. And you could go back and, you'll see distinguished levels. But basically, if you want to view the dollar as being in a double bottom, you know, this would be the neckline. We've had a breakout on a monthly basis, a retest, and we passed that retest, right? And we came right down to the double bottom on a wick. Looking at the type of candle that would be a nice hammer candle, inverted hammer, which is a reversal pattern off a key level. So with the U.S. dollar sitting on this trend line here, you would expect, at minimum, you would be looking for it to maintain this upward trajectory, right? Going into the 109 level, right? That comes from, just key supports, a rough area. It's nothing to write home about, but if you just had to look for the next place the dollar would gravitate to, you would be looking for prices somewhere in this region, right? Pending no breakdowns of the trend line. And that's on a weekly basis. We could zoom in a little bit further and look at it on the daily. Excuse me if you could hear the allergies. I apologize about that. But we have, if you just wanted to draw a straight channel like this, anything, you would be looking for the dollar to maintain and stay above, this trend line. So that would mean you would be looking for last week's low to be you wouldn't want to break last week's low on the Dixie. That's pretty much what we get out of this. And with elevated Dixie, we should expect more downside. Until we rotate below 105.70 on the Dixie, we shouldn't be looking for upside. That's a decent place. If you want to stick an alarm there, let you know. Let me see how many alarms I do have already. I probably need to delete some older ones. Let's get rid of all the old ones. Start the week off fresh, right? Yeah. So basically, you want to know if it breaks down, and it's also, let's say we want to know if we take when we take out last week's high, right? Because that would speak to continued downside in the markets anywhere between these two levels. So anywhere in here, you could expect chop in the markets, whether wide range chop or whatever. So going on, now that we've covered the VIX, now that we know the dollar, we're expecting wider ranges, being that the VIX is more elevated than previous. It seems to have found a bottom. And, we have our boundaries as far as what to look for in the dollar as far as sentiment in the markets. Kicking it off, we also want to be aware of what semiconductors are doing, being that they're a big driver of some of the of the momentum in the Nasdaq, which is what I tend to favor when it comes to finding trends in price. So starting back on the monthly, let's see if there's anything to glean from here. Working from higher time frames going down. Um, this would certainly seem like a double top on the monthly. It couldn't be confirmed until you took out the neckline down here. We're not in a immediate threat of taking out that neckline. But just key areas that you would want to watch. It seems like price respected this area previously in the past, this white line, right? So that's nice to have that on the chart as we start to see how we'll frame price over the weekly, daily, going forward. Being that important companies in the Nasdaq, they tend to this composite index would matter. The semiconductor index, that's your Nvidia, your Qualcomm, your chips, pretty much Intel's. That's what drives the tech sector. So you want to be knowledgeable of just what is the supply and demand relationship between those products, those assets. All right. So basically, we broke down from what would seem like a a bull flag, you could call it. It really don't matter what you call it, but if you see this as a balance area, and I suppose I don't need an extension on this right now, but if you see this as a balance area, let's get rid of that extension and just look at it like this for now. If you see that as a balance area, we've certainly I'm having difficulties right here. So yeah, we've certainly broke down from this as a balance. So excuse me, hold on. and I've been on mute this whole time. I really do apologize about that. I gotta watch it basically, and I'll have to edit that out. Or maybe I'll just voice over what what we'll fix that later in editing. But I was on mute, and that's okay. This is the first video. As things like that should be expected. We're trying to get used to it. I think that's one thing that I do want to make sure I take care of in the future is making sure the microphone never goes on mute while recording. That would solve that problem. Anyway, going forward, keeping things moving. Right here, we'll go right into the NASDAQ, and we'll try to go through these pretty quickly because, um, same thing where we had the double top in semis. We have a what you would consider a lower high. We want to be looking to see if we can make the lower high lower low or a equal low. You know, that would so the monthly downtrend would not start, and a monthly downtrend is very bearish connotation. Excuse me, I have to. With cold and flu season coming around, I seem to be getting a little congested at the worst time. In any case, where was I? Lower high, yeah, a monthly downtrend. That wouldn't be confirmed until we break the yearly open. Uh, that would be very bearish. Um, on a monthly basis, you would expect a lot of red should we break the yearly open after we've set such a pronounced high, right? But we do have a lower high. We could see if we could come in for an equal high. It wouldn't be a downtrend until that equal high level was broken. But if we could hold the lows of the year on a monthly basis, that's the bullish outcome you're looking for. On a weekly, we have produced a lower low, and we also have a lower high. All right, so the weekly downtrend is confirmed. Next week we'll be looking for continuation, seeing if we could get continuation down to this level after noting that we do have a retest already as of last week. We broke down the week prior. We've retested the breakout. We'll be looking for sideways to lower in the coming weeks. As far as being bullish in the markets again, you can't be bullish until you break out and retest producing a higher low. That would be your signal that everything is okay. And I apologize for let me redraw that. So basically we'll be looking to go bullish if and only if we could break out, and when we get that higher low, hopefully off of this level, the 1500, then at that point we'll be bullish. But as long as we have a confirmed lower high, lower low, we should be looking for downside as far as trade ideas going into the future. Going into the daily, same thing. We'll be looking for rejections from this level, rotating lower. Relatively thin structure here. You have some two-sided trade. I guess you could call this as a level, pretty much where we were on the lows. So breaking the lows, you should expect immediate transit down to your 13 level. So that's another area you would want to put out a little bit prior to it. I would want to know about it early on so that I could prepare myself to to and just a little note to self, right? Um, and we'll want to know that every time. And I also want to know more than once, so just get those alarms set, right? Um, if you're trading futures, whether it's midnight or 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 regular trading hours, you would definitely want to know if this as a level is breached, right? Because that's a decent trade setup from there to there, and I don't think that there's not much in the area of resistance for that rotation lower, right? Anything in here you should treat as a range, nice trading range until you get that breakdown. Um, yeah, that's about all on the daily. We can look intraday since this is an asset I trade. But it pretty much speaks the same. We could go even more granular and basically we're saying that we want to be these lows here. You could move this up a tad, right? Like you would start looking bare as soon as that line is broken. That's where you would start looking for the rotation. First being, first level would be the equalize, right? So if you start early on in the week seeing this as a balance, right? Your midpoint right here is you would be neutral. So you would here's how I would frame the markets. How what I'll be looking for, consolidation in this area here. Um, if we break out, you get the retest. You could start looking for upside scalps. I think this as a downtrend. You would be breaking out of it, so you would be looking for upside. I don't think you will go sideways forever for an extended period. And this time, if you go sideways for a bit and break down, you start taking your bear scalps, not really buying upside in this area, just only taking downside scalps. Anything below last week's low is where you really want to start aggressively trading for a breakdown, right? Um, get rid of that. But yeah, that's what I would see going forward, and it would all be delineated uh, by this the mean of this balance area. If you take out your fibs, let's see what we have here. You're looking, yeah, that's about the 50%. So that if you consider this a balance, you would want to be looking, for upside on a retest of that balance. You would be looking for downside on a breakdown and retest from here. Uh, Chop anywhere in the middle with above the 50%. You're taking bull scalps, short scalps, short trades. Yeah, that's how that'll look. Apologize for the drawings. But yeah, moving on along. Let's go back up to the weekly time frame chart and see what we have next. Same thing for the ES, pretty much. They the chart structure is a little more different with the ES below. If you go back to the Nasdaq and look at the same area, we haven't broke down below the support that would have been created right here, right? Um, so I say it's thin structure to rotate down, but this area right here should provide some support. You can see this as a support zone, and that support should start to be felt as soon as we break. So that's another area you would want to put an alarm on, right? You would want to know. You would want to know if we were breaking down when we started to approach. this area right here, going into where the thin structure ended. Right, those are good pips to be had. Not pips, sorry, for my forex day, but those are good ticks to be had. You're looking at, if you were to measure it out, just from the close to the high of the next area, you're looking at 2,000 pips. At one contract, that's $20,000. So, some great trading going forward into the end of the year if we are to break Friday's low of day, if we are to start breaking down from this balance area. Okay. All right. But back to the ES. Uh, we are already below that level that I was speaking of. So how do you wanna frame the ES price? Well, we're currently caught. Let's see. So we have support and resistance area right here. Starting back from here, you can see this area has been respected in the past as a high here, more of a balance area here. It's been support there. We traded through it pretty quickly and we could look at that in a minute. Um, it's been resistance there. It's look like the neckline of a head and shoulders here. Support there, support there, support. I mean, resistance in all those areas. We break through, and we were currently in the midpoint of it. So, after being able to view the significance of this area, let's zoom in and let's say like a 6 hour mid time frame chart. Uh, going early on in the week, you should be looking for either breakdowns. Um, I don't think but we can get some two-sided trade in the middle. Um, or those are your three paths, right? And these are your key levels. So inside, you have your midpoint right here. You could, as long as we're trading as a balance in here, you could short the resistance long in the bottoms. Exiting those trades in the midpoint. If we have a substantial breakdown on a retest of that breakdown of this level here, that's where you'll be looking to go short, and you'll be looking to go long. On the retest of the resistance turned support. All right. And as far as your targets, on resistance breaks after the retest, you could be looking for 44.37. On support breaks after the retest, you would be looking for 41.90. And I draw these extended like this. That's just for a presentation. This could happen on a 15-minute candle. It could happen on a 5-minute candle. It could be a wick right back into it. But if you catch that wick, if you break out of here substantially with some volume and you catch that wick that goes back into it as an entry, that's what I mean. I don't mean that we will play out for days on end. These with the elevated VIX that we saw at the beginning of this video, we should be expecting wide moves. So that kind of gets us out of this idea, unless the VIX is going to start consolidating and going lower. That the balance area is not favorable. Just trading sideways in this area, we should be looking for a breakdown or a breakout early on in a week, and we should be expecting wide ranges. Whether or not, excuse me, whether or not that gets us head and shoulders here, right? That's possible. Just to tag up with these lines here before going higher, that's possible. But regardless of how it happens, that's what you should basically be looking for. Excuse me. So same on the Russell. On the Russell, 2000s, the small caps. Uh, we, as far as pattern wise, we had a head, shoulder, shoulder. Did I say that right? Shoulder, head, shoulder. That's one, right? And then sharing that same neckline, we have this, which is also a decent head, shoulder, shoulder, head and shoulders. That's basically what I'm saying. And we broke down from that over the from mid month September to current, and we're threatening a breakdown of our current support. So the area on the Russell that you would want to pay attention to is whether or not we could reclaim the highs of last week and rotate back to the neckline, and we may get resistance there, or if we continue lower, But again, with the VIX where it is, I would just, if you had a trend line there, I would just watch that. We will be expecting this to play out, early on in the week. You're talking end of day Monday before mid Tuesday. You would be looking for a direction to be set in stone, right? Um, that's pretty much your Russell and your next eggshell. If you break down, you'd be targeting 1683. That'd be the level you're looking at. And many people don't trade the Russell, but as far as sentiment in the market, you want to know where your Russell is trading, um, so that you'll know what the sentiment of the market is, right? You want for there to be a pronounced recovery in the markets, you would expect small caps to they would need to be present in any recovery, right? That's where all the money is generated. We could get into trickle down economics, bioeconomics, all that. It doesn't matter if your mom and pop shops, if your startups, your tech startups, if they aren't contributing to the economic activity in their areas and in the market as a whole, then you're looking at recessionary pressures. That's pretty much the reason why you look at the Russell. Some people do trade it. It's not, it's not for me. So after talking about, the broad markets, and we could get into forex just to, if I have any pip traders here. Going back up to a monthly time frame, and we'll just go through this real quick. So you could draw a trend line straight down like that, right? And then you could draw another one right here. Anything inside of here in this balance area, you would be looking for sideways balance with the VIX climbing. I wouldn't be expecting that, but it is possible. I think usually when you leave this area, you get a pronounced move. So basically, if we take out last month's lows, we should be looking for a bit of an extension. Some volatile moves from this area. Let's go ahead and draw that line in. Since it is pretty pronounced, we'll go ahead and put that in. We'll also put a horizontal right here, so we could start framing price about right there. Right, that looks like where we should be looking. Um, so like I was saying, um, we could, we'd be looking at that as far as timeline wise on a move like that on the euro, July next year. So we could have a period of stagflation. And when I say this about the euro, you should also be keep in mind your Nasdaq, your S&P, your broad markets, because the relationship, the correlation between the euro and other assets, broad market indices, it's it may not be 1 to 1, but it's pretty darn close, right? You should be looking. If I'm saying the euro is going sideways, while the euro is a trading vehicle in and of itself, It would also speak to, its correlation, other assets that have the same correlation to the dollar, which is moving up, which would make the euro moving down. You could also see when the dollar moves up, you also have like the NQ moving down. It's just not as big of a move as the euro. If you really wanted to make some money, forex has been where it is now. But as far as a canary in a coal mine, with the if the euro starts breaking this level, this is another level you'd want to put an alarm on you. If you have trading view alarms, you want to know if we started breaking this support. Let's go into a daily chart. So we recaptured it, right? Um, we recaptured it. We have a inverted hammer. That's usually a bearish candle, right? So early on in the week, all this trading should happen early on in the week. Um, I would not be expecting this up move with this bullish candle. You have another trend here you could put, right? So I would be looking early on in the week, before Friday. If we're going to go lower, we will be definitively lower, and that's why I started the everything in the order at which I did, because we have a loaded chart. We have a loaded calendar for next week. A lot of stuff with Jerome Powell, Harper, Jolts, non-farm payrolls. The Fed has a dual mandate, not only inflation, but keeping an unemployment rate in check, right? So we're getting some data that will move the market, and we're getting a head honcho himself speaking first. I would definitely, with how we just covered the, you know, some of the price action looking forward in broad markets, and in context of who's speaking and what kind of news we're getting. I would definitely, just keep an eye on things. If you're a long term trader, um, you wanna keep your finger on the dial button, calling your brokers. Hey, get me out of everything. Get me in safer assets. Get me into something a little safer, right? Being that we've had a substantial decline in the markets. We have bearish patterns. We've tagged up for and rejected. We have a lot of room to the downside. I understand dollar cost averaging and all that, but more effective than dollar cost averaging, buying on the way down, is keeping all that capital that you know were taking losses on it. Because let's face it, you're buying all the way down, but everything you bought prior, you're taking a loss on, right? So if you could avoid taking those losses and buy at the lows, right? And buy, these areas, they form and I guess it's something you would. And it's not financial advice. This isn't about financial advice. It's more about market commentary, and um I think we should keep it there. But just be mindful that there are a lot of events coming up in the near future. There's a lot of sentiment changes. The tide is turning, and going back to what I said on a monthly, we're not in a monthly downtrend until we're below the yearly open. The year open January, January of the year open right there, of right here on this candle. We won't be bearish on a monthly basis until then. But when you get bearish on a monthly basis, it's already too late. You've missed a substantial, but you still have a substantial, down move to go. But that from here to here is a pretty big distance. That's on the monthly time frame. It hasn't been confirmed. Hopefully it doesn't confirm. On the weekly has been confirmed. When you get your lower high, that's a trend, right? That's a trend. Even if it's a steady trend, we are in a downtrend. That's official, right? Um, I don't care how you draw a trend line at that point. Once you get that lower low, so you have a high, lower low, lower high. Once you get a lower low, that's a downtrend, right? That's the definition of the downtrend. We are in a weekly downtrend. So if you keep drilling in the time frames, considering that we are in a weekly we could come all the way up to, so where with the daily down, because we've been in a daily downtrend, where would it be in jeopardy at? I would say that would be around here. You could come all the way up here. Anything below what, like 15.3, you should be bearish, right? We could come all the, and I don't think we come all the way up there. I think, and we can. It's not about what I think; it's what I'm watching for, and that's why we frame price the way we do. I could talk about my opinion all I want, but keeping things objectively speaking, here's your levels from previous price action that you would want to watch, right? Anything inside of this balance range, you would trade two sided, right? Um, you don't worry about testing that area for, that we were talking about earlier, the midpoint of this balance up here that we broke down from, until we break this balance range. You got to do it first. You can't just teleport up there. So it's no point in looking for a daily trend change until these highs have broken. As long as we're trading inside the balance range, you'd be looking for two-sided trade, good scalping action where you could target your boundaries and take scalps to the midpoint. Right, that's an easy money trades in futures markets all day. And then on the exit of the balance, you would be wanting to go short on any breakdown retest of the balance that we left, right? You'll see this a lot. That's pretty much all you ever do if you consider this a balance. You get two-sided trade in. If we would have broke higher, that's where you would have been getting long. If we would have broke down, we didn't really get a retest. You just would have had to get the breakout on the daily. But intraday, if I delineate that area on a daily, you would have been, I guarantee you would have been able to see a retest intraday. You would have had to find that retest, like say on an hourly chart, right? Where was I? Right here. Yeah. So we broke down and we retested, and we got two retests. We formed a smaller intraday balance, and we broke down from it and got a retest. We came up. So you get plenty of tests to show you that you're not getting acceptance back inside, right? And that's really all we're getting at right there is that once you leave a balance, you want to see if you could get acceptance back inside that balance range, right? That's what it's about. We're gonna go through some of the big cap tech stocks. Probably keep it on a weekly. Um, Probably just, yeah. All right. So Apple, what do I see here? Um, Apple's in the, well, let's just look at it trend wise, right? So already we talked about weekly, downtrends. We're in a weekly downtrend, right? We have a high, a lower high, a low, and with this week we broke down. We broke the equal low. It was an equal low prior. This candle was not lower than this low. with last week's price action, we have a weekly downtrend in Apple. So, if you have a weekly downtrend, it stands to think that you already should be knowledgeable of the daily downtrend. Let's take a look at it. If we are to stay in this daily downtrend, you're looking for Apple. So it's been getting more and more bearish, right? Like you had a trend line of this slope, and now you have a steeper slope. You would be looking for Apple to just fall out of bed. Um, so targets on Apple. Targets on Apple. This stands out right here as in the past. That's where we broke out from. We have a shoulder, head, shoulder. We got an inverse headed shoulder right here. This was your neckline, and that's where all of the bullish sentiment from this year, from the yearly open. Again, Apple being the highest market cap weighted component of both the Nasdaq and the S&P 500. Wherever Apple trades, the rest of the market will go too. So with us breaking out, and at the beginning of the year, we failed. We went into a weekly and a daily downtrend, and we are currently at resistance. Um, you should be looking for downside in Apple. You should, early on in the week. What is this? By midday on Monday, you may get some upside right here, but basically you should be looking for downside. Minimum upside. I wouldn't be taking any of these upside trades. I would be taking scalp short, right? Anything below here, you first target the recent lows, and then you look for breakdowns from it as well. Next week is, like I say, it's shaped up to be a exciting week to say the least. Um, let's see here. Yeah, and I think as far as big cap tech, you should be seeing the same fractal patterns in these charts, right? That's just the expectations going forward. So here on Tesla, key levels of interest, right? Um, if I had the frame price, that was on a 4 hour. Let's zoom out. Okay, let's redo that. Zoom out to a weekly and apologize to congestion. Not sure if you could hear that, but if I had the frame price on Tesla, I would start back here, noticing that Tesla really doesn't become bearish. And you could probably fix, if I spent time on it, snug this trend line up. Right, let's see if I can get, because I think this does matter where you place your trend lines. You want to make sure you're finding the support and resistance areas that big time market participants are respecting, right? And I would say it's right here, right? Being that this would have been a trend line that was broken, it was resistance, we broke down, but notably when we had this liquidation sell-off, there was high demand at it right there. So noticing how it's been respected in the past, back there, here, it was a breakout point retest. Um, that's currently where we are with it. There would be another market participant, a notable market participant here, maybe the same one front running itself, but this is also a demand zone. So if you want to see, so Tesla is not trading like the rest of the market. I would say it's one of the more bullish components of the market. I would watch it for breakouts rather than breakdowns. Breakouts happening over 289, right? Um, Being that we have this long time trend line back here with a slope, rise over run. That would mean how frequently someone is buying, and selling or on in this area. So they had a gradual long term buy, but recently here, since the beginning of the year, they've been more aggressively buying Tesla. That could be seen. That can be seen in the charts that they've been more aggressively buying. Their buy line, they're currently on it now. And this area right here is an area of resistance where nice sell-offs have, happened from in the past. So, being that the buyer is closing in and to the seller, you would expect volatility in this area. If we break down, it should happen fast. But if we do get up and over 190, that would be a strong buy at that point. But you really want to watch for the breakdown, being that we have the markets trading bearish currently, right? So you want to always be mindful of what's going on up here, what's going on in the broad market, how sentiment is, globally, and also the news and what's going on next week. That way you can frame some context around how what you should expect in these plays. We'll take a look at Nvidia. Nvidia, it found support right here. So it's like a broadening wedge. I would just watch this support line. That's pretty much it. We have thin structure below us right here. Get rid of that. That's that magnet tool making me drag. But we have thin structure right here. So be mindful of that. If we do start breaking these levels, this level in particular, you would expect us to retrace through this thin structure to an area of support being right here. All right, this is the area that's been respected in the past. So going forward into the future, this is the 280.81 level is where, and you could put this top on there as well. This would be an area that, so the first area, second area, target to the downside. So about a 50% drop if Nvidia doesn't hold the supports that it's creating currently in the market, right? Let's zoom in a bit. Yeah, so if we start breaking last week's lows, that's what you would expect, and that level would be around 420. 420 gets us to 335, right? See what percentage of a drop that is. These are the levels that you want to keep an alarm on. You're looking at 20% gone. So if you could sell here and buy there, that's selling buy low, sell high, right? Or, in a downtrend, sell high, buy low, right? You could get a bounce here because you're facing a 20% drop in these markets, quick over it. This won't take long. You see how back here, how that gap, a 20% gap up could look. This could be one daily candle. One day you're up, next day you're down 20%, and then another 15 on top of that, 30% quick. And we'll speed through the rest of these. We got Goog right here. Nice sell off on Friday, right? We filled the gap, and we're looking for lower prices. Netflix, it's down. Microsoft, Amazon, yes, the rest of them pretty much. I think that's pretty much gonna wrap up this first video. Hopefully I could get things to go a little smoother next time. Get me a program format out. Get more, better at what presenting information. Get my speech a little better, my vernacular. Uh, I'll be listening to this video saying how I can improve things. But as far as the content, as far as what really matters, I hope you enjoy that. I will try getting into some editing. I know I'm not sure if I'll edit this video, but I know it is important. Uh, yeah, but anyway, thanks for trading. We looked at some momentum movers. Um, as far as we didn't really get into them, but I think it was a nice start. We're building momentum here with this video. Anyway, you've been looking at this is market commentary with Darnell Pryce. Yes, I am the Price. And until next time.